$6.18, down 0.16 or roughly 2.44% on the intraday session as we navigate the tape on this Monday, December 1st. If you are looking at that price action and wondering why an AI stock is red on a day when the sector is generally buzzing, you are asking the wrong question. You are looking at the ticker, but you should be looking at the corporate governance calendar. Today, December 1st, is not just a random Monday for BigBear.ai. It is arguably the most critical day in its corporate history since the SPAC merger. The expectation from the casual retail investor, the one who sees AI in the name and buys blindly, is that this is a simple buy-the-dip opportunity on a tech stock taking a breather. They assume this is just normal market fluctuation. The reality is that today's price action is a direct, visceral reaction to the special meeting of stockholders scheduled for today. The market is currently pricing in the fear of dilution. The agenda for today's meeting involves a vote to double the number of authorized shares of common stock from 500 million to 1 billion. When you see a company asking for permission to print that much paper, the algorithmic knee-jerk reaction is to sell. The reality is that BigBear.ai is clearing the runway to pay for its ambitious $250 million acquisition of Ask Sage, and the market is terrified that your slice of the pie is about to get significantly thinner. This isn't a tech sell-off, it's a corporate finance standoff. Let's dig into the volume. It is ticking up as we speak. This suggests that stakeholders are positioning themselves ahead of the vote results. If the measure passes, which is likely given institutional backing, the company gains the dry powder it needs to close deals. If it fails, the Ask Sage deal could be in jeopardy, or at least the financing of it becomes much more expensive. The drop to $6.18 is the market demanding a risk premium for this uncertainty. Now let's strip away the hype and look at the Ask Sage acquisition, because this is the pivot point for the entire bull thesis. The expectation is that BigBear.ai is a defense contractor that does some data analytics. That was true, but Ask Sage changes the DNA of the company. It brings a generative AI platform that is actually certified for government use, GovCloud. This is rare. Most AI models are too leaky for the Pentagon. Ask Sage is designed to be secure. By buying this, BigBear.ai is trying to stop being a services company, low margin, selling hours, and start being a product company, high margin, selling software licenses. The market is skeptical, hence the red day. But if this integration works, the multiple on the stock should expand from a contractor multiple to a SaaS multiple. I want you to pause and check your own portfolio. Comment below if you are holding BBAI through this special meeting or if you sold the news last week. I am genuinely curious if you are willing to stomach the potential dilution for the long-term payout. To understand why $6.18 is a battleground, we have to look at the recent Q3 earnings. On the surface, it looked like a miracle. They posted a net income of $2.5 million. The headline readers celebrated. But the professional analysis, the reality, is that this profit was largely due to a non-cash change in the fair value of warrants and derivatives. They didn't sell $2.5 million more in software, their complex financial instruments just fluctuated in their favor. In fact, revenue was down roughly 20% year-over-year to $33.1 million. This disconnect, profitability on paper versus shrinking revenue in reality, is what the bears are feasting on today. They are betting that the organic growth isn't there and that the company is buying Ask Sage to mask that decline. If you are trading this on a Fidelity trading platform or watching the order book on interactive broker stock trading screens, you need to watch the $6 level. This is the psychological line in the sand. If the vote news hits and is perceived poorly, a break of $6 could trigger stop losses down to the $5.50 range. However, if the market realizes that the dilution is a necessary evil to acquire a high-growth asset, we could see a relief rally back towards $7. Let's discuss the concept of operations and the customer base. BigBear.ai isn't selling to teenagers, they're selling to the U.S. Army and airports like Heathrow. The Heathrow partnership announced earlier this year is a critical validation. It shows that their Vision AI, the ability to track anomalies in crowds, works in the real world, not just in a lab. But government and infrastructure sales cycles are agonizingly slow. The expectation was that AI would speed everything up. The reality is that the government still moves at the speed of government. The revenue decline in Q3 was partly blamed on lower volume on certain Army programs. This is code for the contract is active, but they aren't ordering as much right now. We also need to talk about the short interest. It has been creeping up. When a company announces a massive share authorization increase, short sellers smell blood. They anticipate that the company will issue stock to raise cash, which naturally lowers the price. They are front-running that issuance. This puts pressure on the stock today. However, if management comes out and says, "We have the authorization, but we promise not to use it all at once," you could see a sharp squeeze. If you are using SoFi Invest or Robinhood stock trading apps, you are likely seeing a hold rating from most analysts. That is Wall Street speak for, "We don't know yet." They are waiting to see if the Ask Sage revenue can actually plug the hole left by the declining legacy contracts. The Ask Sage platform has high recurring revenue potential, which is the holy grail. But integrating a startup into a public company is notoriously difficult. Culture clashes, tech stack incompatibility, these are the risks that aren't on the PowerPoint slides. What about the broader AI trade? NVIDIA stock and Palantir have set the bar impossibly high. Investors expect every AI company to be growing 50% year over year. BigBear.ai is shrinking. That is the hard truth. But BigBear.ai is valued at a fraction of Palantir's multiple. You are buying a distressed turnaround AI play, not a market leader AI play. The upside is higher if they succeed, but the floor is much lower if they fail. Let's look at the institutional flows. We saw some rotation in Q3. Some funds exited, likely tired of the volatility, but others like BlackRock added to positions. Institutional investors don't usually buy into a shrinking revenue story unless they know something about the pipeline. The backlog sits at around $376 million. That is healthy. It means the work is there. The issue is conversion, turning backlog into revenue recognized in the quarter. The future outlook hinges entirely on 2026. Management has guided that the Ask Sage deal, combined with new contract wins, will return the company to growth. If the December 1st vote passes, they have the currency, stock, to make it happen. The bull case is that by Q3 2026, BigBear.ai is a $150 million plus revenue company with positive EBITDA and a growing commercial footprint. The bear case is that they use the new shares to keep the lights on while revenue continues to bleed. As we move into the afternoon session, keep your eye on the news feed for the results of the special meeting. That is the catalyst. If the authorized share increase is approved, expect immediate volatility. To summarize, BigBear.ai is down 2.44% at $6.18 because the market is bracing for a flood of new shares. The company is asking for permission to double its share count to fund its future, specifically the Ask Sage acquisition. The expectation is that this is just another AI stock. The reality is that it is a company undergoing a high-risk heart transplant, swapping out old, slow government services revenue for fast, new AI software revenue. If you are in this trade, you aren't betting on a chart pattern. You are betting that the CEO, Mandy Long, can execute this integration without destroying shareholder value in the process. It's a high-wire act. Don't look down. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. Backwards. If you found this helpful, don't forget to like, comment, and share. Hey, stay smart with your money.